Good evening and welcome to the Strategy of the Week for Friday the 13th of September 2013. My name is Brian D'Amico, Manager of Educational Services here at VectorVest, and it's my pleasure to present your strategy this evening titled VectorVest Canada Challenge, Third Place Winner Revealed. Back on August 2nd, Steve Chappell introduced the VectorVest Canada Challenge in his Strategy of the Week video. You had the opportunity to win either $500, $1,000, or $1,500. Many people entered, but only 3 could win. Tonight I'll demonstrate the trading plan created by our third place winner who has won $500. Even though only 3 people could win prize money, we all end up winners because we learn new techniques to making money. For detailed information on the VectorVest Canada Challenge, I recommend watching the Strategy of the Week presentation back on August 2nd. That video will describe what the rules were, the settings of the backtest, and how we scored the entries. Let me give you a quick overview. Here's the market timing graph from July 2nd, 2008, all the way through July 31st, 2013, which is the period that we used for the challenge. We challenged you to create a trading plan that outperformed our trading plan during this time period. As you can see, there were all types of market conditions during this time. There were some big drops, there were strong rallies, and there were sideways or flat markets. So if you had a trading plan that could consistently make money during this time period using a mechanical method, you were definitely onto something. The trading plan that we created had a total gain of 214% and made money 4 out of 5 years. Now we thought that would be tough to beat, but several people managed to do it. Our third place winner, Derek B., created a trading plan that had a total gain of 566% during the same time period. And look at that beautiful equity curve that it's got. Let's look at what he did. Here's a look back at the market timing graph, and I've placed our DEW market timing signals on the graph. I talked to Derek yesterday to get an understanding of how he developed such a tremendous plan. He said he had a few favorite searches that he uses, so he started testing those, and then he tested a few other searches in the system. When testing his long searches, he went straight to the backtester and found a couple that had the best performance. He found that VST Mighty Mites and Aggressive Rebounders had the best performance. Once he did that, he then started to tweak the stop criteria to fine-tune it for the best performance he could get. When he started testing the searches for the downside of the market, he started testing back here in the 2008 crash of the market. And what he did was he started by using quick tests from the DEW down signals through the DEW up signals. So he was testing all the short searches from down to ups to see which ones had the best performance. He found 2 short searches that performed the best. Mini Rockets short was one, but he found that Hindenburg stocks eked it out slightly. So let's take a look at his trading plan. One of Derek's goals was to keep his commissions low. So he decided to use those DEW signals to time the market. And they told him when the market was in an uptrend or a downtrend. When a DEW up signal came, he would buy 5 stocks from the VST Mighty Mite search. And when a DEW down was signaled, he would close out of all of his long positions and short the market using 5 stocks from the Hindenburg stocks search. These searches should sound familiar to you. They're actually used in our Surefire Success model portfolio. Derek also wanted to keep his drawdown fairly low. So he drew on his experience and he decided to keep a tighter stop on his short positions. He said he didn't want his short positions to get away from him. And you can see that here he had a loss of only 12% before he would cover those shorts. But he did allow them to go up 40% before he would close them out. On his long positions, you can see that he did allow a little bit more room to move by using a 50% gain or a 20% loss to close his positions. So let's go into VectorVest and take a look at those 2 searches, and then we'll build his trading plan. Here we are in VectorVest 7, and we're right here on the Unisearch tab. To access these searches, simply come over here and open up the Searches RT Combo Pairs folder. And they're both listed right here. Now I'm going to click on VST Mighty Mites. And if you look over here at the criteria, you can see that it's looking for stocks that have very good upside potential, since they have an RV greater than or equal to 1.2. In addition, the earnings growth rate is also very good, because the earnings growth rate needs to be between 14 and 45. Another thing that tells us that these stocks are fundamentally sound is this criteria down here, RV plus RS. So the sum of those two fundamental indicators, which are proprietary to VectorVest, needs to be greater than or equal to 2. Now when you do run the search, the stocks will be sorted, so the ones with a high VST and GPE but a low relative timing will appear at the top of the list. Basically, this sort makes the search a bottom fishing search. In other words, you're looking for fundamentally sound companies based on the high VST and GPE along with the criteria we looked at down here, but they've been beaten down, and you could tell that because they have the low relative timing. And if you look down here in the comments box, you can see that when we use this search for our Surefire Success model portfolio, we're using the RT Kicker combo timing signal and using a 20% gain or a 5% loss to sell the stocks. Derek found great performance using the DEW signal with a 50% gain or a 20% loss. Now the other search that Derek used was this one right here, Hindenburg stocks. If we look over at the criteria, you can see that it finds stocks between $10 and $20. However, the main part of this search is the sort. It divides RV by RT and sorts it ascending. Basically, these stocks have a very high RT and a low RV. These are going to be typically overvalued stocks with poor fundamentals that have been on a tear recently. These are the stocks that typically fall quickly, especially when the market starts to fall. Now if I run this search, you can see what I'm talking about as far as the stocks go. Now, if I shrink this left-hand side, you can see down here, if you compare the price to the value, you've got overvalued companies here. If I scroll over a little bit, you can see the relative timing is very high. Again, these are the type of stocks that fall quickly when the market starts to fall. So let's take these searches here and build Derek's trading plan. A link to the trading plan can be found in the views tonight if you wish to print it for yourself. So I'm going to come up to the top and I'm going to click on the Backtester tab. And once I do that, I'll click Backtest an idea. And we're just going to use the default settings here of $100,000 and $9.95 per trade, and we're not going to use margin. Now to build this backtest, you will need to use the auto tester. So you have this market timing section. And if you don't have the auto tester, there's a link in the views tonight to get a free 2-week trial to it. So I'm going to click on the market timing tab, and I'm going to change this to the DEW signal. And I'm going to click on automation rules up. So I need to tell the backtester what to do when a DEW up signal is generated. So the search, once again, is the VST Mighty Mites. So I need to come down and select it from the RT Combos Pairs folder. Choose VST Mighty Mites. Go to the stop criteria. Percent gain loss will be a 50 gain and a 20 loss. So change that to 50 and change that to 20. Now we will not simulate intraday stop, so I'll uncheck that. We're going to base all of this on end of day pricing. I'll come up to the More Settings tab, and we're going to try to maintain 5 positions, so I'll dial that down to 5. If a position gets closed out, we will try to automatically replace it. And when opening new positions, we're going to try to open all 5 positions immediately on the first DEW signal, so get all 5 right away. When entering this situation, we're going to close any open position, which basically means if we have any short positions in our portfolio, we're going to close them all out and open up 5 new long positions. We come down here, we're going to invest all of our buying power. So if whatever buying power we have available, when we need to buy a new position, we're going to use that. And I'll scroll down some more. We want odd lots, and we want to account for the wash sale rule, so we'll raise this up to 31. And we'll leave this box checked, and we'll dial this down to 2% of the stock's average volume. So once all that's set, we're going to tell it what to do when we get a DEW down signal. So we will be selling short. We'll use Hindenburg stocks. Our stop criteria will be a percent gain loss, and we'll use a 40% gain or a 12% loss. Once again, we're not going to simulate intraday stops. We'll base it on end of day pricing. More settings, 5 positions. Automatically replace all 5 at once. We will close any long position that we have in the portfolio when we enter a down situation. That way we can get 5 short positions. And we'll invest all of our buying power that's available when we need to open up a new position. Odd lots, we'll do 31 days once again. And move this down to 2. Next, we'll just hit next. And we'll set our test period. And the first day of the test was back in 2008. So we're going to go back to 2008, choose July. And we started on July 2nd, and we went through to July 31st of 2013. And we'll hit next, and we'll just give this a name. And let's just call this one third place, Derek B. And with that all set, let's just run this and see what we get. And while it's running, let me just pull this up a little bit so we can see it a little bit more clearly. All right, so let's take a look at what we got here. An overall gain of 566% during this 5-year span. That is fantastic, and you can see that right over here in the annualized rate of return, over 100% a year. And the drawdown is also reasonable at 18%, especially considering what the market did when this test first began. You know, this was in the middle of 2008 with the financial collapse, and then we had a horrible market there right here in the middle of the test. So to have only a drawdown of 18%, that's fantastic. So tremendous trading plan here by our third place entry. So Derek now walks away $500 richer based on this entry. Again, to get a copy of the settings of this trading plan, use the link in the views, and also take out that trial of the auto tester if you don't already have it, and test it out yourself. I'd like to thank you all for attending tonight. We look forward to having you back again next week, where we'll reveal the second place winner in the contest. Have a great weekend, everybody.